Stop investing right now. Seriously, put your phone down, close your brokerage app, and stop buying stocks, crypto, or real estate until you understand the trap you are walking into. Most people are obsessed with the wrong number. They are chasing net worth when they should be chasing liquidity. This mistake is exactly why people who look rich on paper end up completely broke in real life. I call it the cash flow trap, and it is the single biggest reason why new investors fail. We have been conditioned to believe that wealth is simply buying assets, but if you do it in the wrong order, those assets become a prison. Imagine having $50,000 in the market while your car breaks down and your bank account is empty. You are forced to sell at a loss just to survive. In that moment, you don't own your money. Your investments own you. The reality is that cash flow is the lifeblood of financial freedom, not net worth. Net worth is a vanity metric, a number on a screen that makes you feel good, but cash flow is what pays for your groceries and your peace of mind. Before you invest another dime, you must build a fortress of liquidity. This means mastering free cash flow, the money left over after all expenses are paid. If you are investing $500 a month but are one missed paycheck away from disaster, you aren't an investor, you are a gambler. The market doesn't care about your personal problems, and if you have to liquidate your portfolio during a correction because you lacked cash, you have destroyed years of compounding in a single afternoon. We also need to address this silent killer, being asset-rich, cash-poor. Whether it is a house that barely breaks even or stocks that don't pay out, these assets can actually drain you through maintenance, taxes, and fees. You are bleeding out slowly while waiting for a payday that might be 10 years away. This is how people go bankrupt while owning millions in real estate. To avoid this, you must stop investing in things that drain your pocket until you have 3 to 6 months of expenses in a high-yield savings account. That cash isn't losing to inflation. It is insurance. It is the trench that protects your castle, allowing you to hold your investments when the market crashes instead of panic selling to pay rent. So how do you escape the trap? It starts with the 1-month rule. You need to get to a point where you are living on last month's income, meaning January's earnings pay February's bills. Once you have that buffer, extend it to 3 months. Only then do you earn the right to invest aggressively. When you do return to the market, change your perspective. Stop looking purely for appreciation and start looking for cash flow. Focus on dividend stocks, cash flowing real estate or side businesses that pay you today. When your investments generate monthly income, you no longer have to worry about what the daily price is. You escape the trap by ensuring your lifestyle is funded by reliable streams of income rather than by selling off pieces of your portfolio. Finally, remember that the wealthy play a different game. They focus on cash flow first because they know that as long as cash is coming in, they can weather any storm. If you're just starting out, your greatest asset isn't your portfolio, it is your ability to generate and keep liquid income. Don't fall for the hype of time in the market. If you don't have the cash to actually stay in the market when things get rough, the market will shake you out if you are fragile. Stop investing today, build your reserves, and fix your monthly cash flow. Once an emergency becomes a mere inconvenience rather than a crisis, you can invest with zero emotion and total confidence. That is when real wealth is built.